Brexit may be confusing, but it sure does make for good TV. I want to bring in Scott Bauer because it also made for pretty good market action today. The CEO of Prosper Trading Academy, of course.
Yeah.
Scott, lots of fun accents, lots of mixed messages, some progress, but then also potential delays on the way. So what'd you make of the market's kind of turbulence around this?
Definitely mixed messages, and it's kind of fun listening in if you're actually watching live what was going on there. You know, in the first news that came out was pretty positive for an acceptance of his proposal, and the market seemed to like that quite a bit. And then all of a sudden, you know, the market started selling off, not drastically, but we saw a little bit of a market sell-off, and traders were looking around saying, what just happened? What just happened here? And what it was is that, you know, the parliament voted down the vote, I guess, to happen in a 3-day period. So what that did was just add uncertainty back to the marketplace about Brexit, if and when, and maybe added the heightened possibility that we're going to see an extension. So, you know, we saw it in the equity markets a little bit. What you really did, though, was see massive gyrations, almost like a jackrabbit with the pound. Right? We saw the pound just all over the place here in reaction to these two major announcements.
So the move on the large scale, of course, still is impressive to the upside as we're looking at the year chart. But guys, let's take the intraday, and you're going to obviously see the craziness that Scott's describing here. Now, we ended up lower, so the fact that this is not passing immediately, right? He's still, I kind of, did my bad impression before the break. He's still got to take it now and go back to the EU. This is what the demands are. He was legally required to do this. So I guess we're kind of back to a degree of timing uncertainty, but at least in terms of content, maybe some certainty remains resolved.
Absolutely. So it's definitely, this was probably the case of 2 steps forward, 1 step back. So a glimmer of hope, however, very cautious. And it does seem to me, again, Oliver, and we've discussed this before, the likely scenario to me is that they'll get an extension. Now that they have an agreement on content, but the timing is off, we'll probably get an extension. Now, whether that extension is a matter of weeks or a matter of months, that's really the uncertainty that came back into the marketplace this afternoon.
Yeah. So, Scott, is there then a still trend, you think, which is a reversal where we've had dollar softness, pound strength, and even if we just put the pound aside for a sec, dollar softness in general? I mean, do you want to look at this now and say, okay, well, it has to go back to the trend higher until we get resolution, or do you not want to get in the way of this big reversal that we've seen?
No, we have seen a big reversal. In fact, the biggest reversal that we've seen in over a year. We're not quite to where we were, on the lows earlier this year. However, there have been some lower highs and lower lows in the dollar. So if you're a technician, if you're a chartist looking at that, it definitely has to concern you. Now, that being said, I think that, in the near term here, we probably see a little bit of a rally in the dollar. But, going out 3 months, 6 months, charts are looking fairly bearish.
Yeah. Scott, as it pertains to some of the so-called safety assets, we had a sharp move higher in gold. We had a sharp move higher in bonds as well on the development from Brexit. And then it kind of looks like maybe we're fading those a little bit as well. Both moves were higher at the start of today's session, and bonds and gold faded again.
Yeah, they did. And we're not getting up to that 190 level, which I think was the high back, a month ago or so. And, we're seeing the 10-year sell off from there. And it's really anyone's question at this point. And that's what this market is all about right now. It's all about uncertainty. What is going to happen with Brexit? Not that I'm so convinced that is going to be the end-all, be-all to our bond market, but what is going to happen with the Fed? Are we going to continue to get some weaker economic numbers? What is the Fed going to do? It certainly, to me, seems unlikely of any sort of movement at the next meeting, but are we going to get one before the end of the year?
Yeah. All right. So, Mr. Scott Bauer, last question to you, which is, amid all the earnings and stock-specific action, do you expect there to be a continuing of kind of pressure on bonds, or does the Fed in its cut put a little bit of relief into this trade that's kind of turned around a little bit lately? I mean, if the Fed comes out and says, look, we're game for the cut, do bonds start rallying again?
I mean, they have to, right? You would think, and that is just underpinning, probably the rally that we've seen in the market, which I really like this rally that we've seen, and albeit it's on the heels of some pretty decent earnings that we've seen so far, but I like it because it's very methodical. It's very slow. We're not seeing this big volatility, which everyone, including myself, has expected, especially in the month of October. We're not seeing, these 2-3% moves that we kind of got used to. So that, to me, Oliver, that a nice steady rally, that really puts in a nice base for this market moving higher, from here on out.
All right, nicely done, Scott Bauer, helping us make sense of some wild action here. He's the CEO of Prosper Trading Academy. We'll be right back.